Hello again, everyone. It's Vince Farr from TradeWinds.com, and this is our update for March 12th, 2017. Hope everyone's having a great weekend so far. Let's take a quick look at how we finished off last week. Well, we had that jobs number out on Friday that came in higher than expected. It came in at 235,000 jobs, but it didn't come in as strong as the ADP employment report from Wednesday had suggested. So the market did bounce around a little, but in the end did finish slightly higher. The Dow was up 44 points, and as you can see, is right back at that 20-period moving average. Nice orderly pullback here. Did close this gap, and looks like we could be getting a bounce here and a move to new highs any day now. The S&P 500 finished higher by 7.5. You can see it's also turning at that upsloping 20, while the Nasdaq was up 23 points, and the Russell was up 5. Now, the Russell looks a little different than the other three charts. Not trending nearly as well, and you can see that it has made a move here below that 20-period moving average, right back into this area of congestion here, trying to hold on. But if you look at the slope of the 20, not only has it lost momentum, but it's actually, actually starting to roll over a little here. So that's not a very positive sign. We'll continue to keep an eye on this. Bonds, TLT, the 20-year Treasury ETF, hitting a new low on Friday, 116.68, and trying really hard to hold on to these lows. But if we look at the weekly, certainly does not look good. Momentum sharply lower, and after this sharp move, you know, when quiet, consolidating here for several weeks, but last week was starting to break down once again. This looks like it's certainly headed lower in the near term, while gold gold also having a down week last week. Friday again managed to gain just over a point, but still a fairly ugly week overall. And you can see here that it's starting to roll over again, still has momentum to the downside. Now, crude also down over 9% last week, a huge down week for crude, and certainly doesn't look good. We finished off the week with this bearish engulfing pattern right here, and let's look at the weekly chart, and yeah, it's breaking down as well. So, you know, not a good week for most things overall, but for equities, we were really on hold, not only for that employment report, but for the upcoming FOMC announcement this week. Will they raise rates? Well, I think it's pretty much a given that they will. The only question is, will they do a quarter point or a half a point? Now, you know, according to the result of the ADP employment report last Wednesday, if we had a similar jobs report like that, maybe they could have raised or would have raised a half a point. I think they're going to do a quarter point this week, which is pretty much already baked into this market. So I wouldn't expect a huge reaction. But what will be key is the wording in the report. And do they suggest more than the previously announced 3 reports for this year, or increases for this year? Or are they expecting to be a little more aggressive and hike rates more frequently? That will be a key. And also remember that this coming Friday will be Quadruple Witching Day once again. That's the day where market index futures, market index options, stock options, and stock futures all expire on the same day. What it means is a much more volatile day. So not a huge concern for swing traders and investors, but for you day traders, it's going to be a very interesting day. All right, that's about it for now. Enjoy the rest of your day, and we will see you on our next update.